This is a simple guide on how to lower your risk easily and instantly when selling options on commodities specifically. And this is based on my 10 years of experience, and I've done my fair share of mistakes. So hopefully this video will be really useful. Now it's very simple. There are some rules of thumb that you definitely don't want to kind of violate. And then there's obviously a few more little tricks. So the first thing is, when you sell strangles only, you should sell strangles only when volatility is relatively high. And this is specifically for strangles. Basically, when you sell a strangle, you are selling volatility. If you sell strangles when volatility is low, then you are just shooting yourself in the leg. Doesn't matter if you might miss out on some profits this way, but overall, long term, if you really want to be a mature professional trader, you will only ever sell strangles when volatility is relatively high. And I have quite a few videos on exactly how I sell strangles. This is kind of like my bread and butter. So I have a lot of experience with strangles on commodities specifically. Now, you can sell puts when volatility is okay to low. And this is only on these commodities. So these products only: gold, silver, copper, crude oil, natural gas, wheat, and soybean futures. The reason is because these products, they crash upwards. So if you sell puts when volatility is low, for example, and suddenly there's a spike in volatility, this is usually would happen because price went up. And because we sold the puts and price went up, it's going to be a pretty beneficial thing for the position. And this is specifically for commodities, for these products over here. And there are a few more commodities, of course, but these are the ones that I only trade with. So this is something that I can normally do if there's nothing too crazy. But again, this is kind of a rule of thumb that you can kind of follow. Now, you can sell puts on ES only when VIX has a spike. So this is a big thing. If there's a spike in the VIX, usually price dropped. Obviously, you need to follow the news and see what's going on. But this is the only kind of situation where I might sell puts on ES. I would never sell puts if volatility is low. It makes absolutely no sense. I know a lot of people do it and make money this way, but they make money up until they don't make money and they lose everything that they've made, right? So, and when we're trading, like with any other business, it's very opportunistic. You need to take advantage of really good opportunities. And on the ES, because the ES is crashing downwards, selling puts will make sense only when volatility is high and the price already kind of crashed down a little bit. Again, commodities, they crash upwards. That's a really big difference from stocks and the ES. Now, you can sell calls only when volatility is high. So this is pretty much the inverse of the ES. When we sell puts and volatility is high, here you can sell calls when volatility is high on the commodities, but because again, they crash upwards, so you might wait for them to crash upwards. Volatility might increase, and then you can sell some calls for a really juicy premium and be really far out of the money and have a really high win rate this way. Now, another little trick, I guess, you can just buy calls and puts with low DTE if margin is growing too quickly. So if you're already in a position, let's say 45 days to expiration, you sold a short put, price goes against you, and margin is growing too quickly, you can just buy very cheap puts with less days to expiration than 45, and it will basically slash your margin in half or more, depending on how many puts you're gonna buy and what strike, and it will cost you very little. But this way, you can at least control your position and your margin, which is really important. Now, the biggest thing of them all is understanding supply and demand balances. And like I said, this is an absolute key, right? You need to understand the products that you're trading and what can move them, what is going on in their supply chain. Are there any disruptions? Is demand okay? And it's really easy. It's not that complicated. So I'll give you an example. Currently, I am in a position on crude oil. I sold a short put. And currently, as I'm making this video, I'm about 34% on the position. So I sold it right when the price was right here. And the reason I sold the short puts is because there's a lot of geopolitical instability with Russia, with Ukraine, in the Middle East as well, and possibly some more sanctions on companies that buy Russian oil. So these are all factors, and oh yeah, and we have a probable interest rate cut, right? So these are all bullish factors for crude oil, right? So I know these things are going on, and I don't want to be exposed on the call side because again, the commodities, they crash upwards, right? This is a big thing to remember. So I want to be on the safe side, and I sold puts. Volatility wasn't high, it was okay, right? And volatility didn't go up actually, but my position is really profitable because again, price is moving away from the short strike, the put strike, and obviously the delta is doing its thing and offsetting the increase in vega, increase in volatility. So this is just kind of a simple kind of, I guess, cheat sheet or guide that you can use. And this is another example of a position I closed last month in August. I sold a strangle right when the price was around here on soybean. And what happened here is basically we had some news. We had a volatility spike. The volatility was really, really nice, really high basically. And the news were non-critical really. It wasn't anything too crazy. And the position profited quite nicely and quite quickly. And obviously it could have profited even more if I would have waited more, but it is what it is. I took some profits off the table quite quickly. So this is kind of it for this video. Hopefully it makes sense when to sell calls, when to sell puts, and when to sell strangles based on volatility, because this is a game of opportunity. And if you know approximately where you're, where you have a higher chance of profiting based on this little cheat sheet here, you'll be doing really, really good long term. So thank you again. If you have any questions, let me know in the comments, and I will get you in the next one.